Good afternoon, everyone. My name is Omolabake Olagunjo. I'm a senior program associate with the Creative Economy Practice, and I'm based at the Lagos office. You are welcome to the Fashionomics Africa Accelerator online program. Today, we'll be covering proper financial management, expense management, proper internal controls, and revenue management. Kindly note that translations are available in English, French, Portuguese, and Arabic. We request that you look for the round interpretation icon at the bottom of the screen to select your preferred language. Welcome to today's session. And while you wait, please turn on your cameras if you can and share in the chat what you are looking to get out of the session. Before we start, here are some ground rules. Switch on camera if you can. Use the chat box to ask questions. Raise hand if you want to say something. What we discuss here stays here. Mute your microphone unless you want to speak. Participate actively. Give space for others to participate. Please ensure that your Zoom name matches your registration name. This is for the purpose of taking attendance. Attendance will be taken anytime during the session. So again, we ask you to ensure that your Zoom name matches your registration name so that you are not marked absent. Meet our facilitator today. Abiodun Ajanaku is a chartered accountant and financial data analyst scientist. He is passionate about problem solving and providing financial management support to startups, CEOs, board of directors, and investors. He is currently the group finance lead at Co-Creation Hub, CC Hub. Abiodun believes that financial data is the most important asset for decision-making in any forward-looking organization. He strives to support companies in creating effective financial management system that supports the use of financial data to accelerate growth and performance. Abiodun has in-depth domain expertise and experience in numerous areas of finance, including but not limited to financial planning, analysis, and management using modern analytic tools, business strategies, risk management and compliance, operation management, financial governance, financial modeling and operation research, investment management, financial due diligence, expansion and acquisition, project grant management and reporting, application of machine learning in automating financial workflow. We are excited to have you today, Abiodun, and we look forward to a great learning session on proper financial management, expense management, proper internal control, and revenue management. The floor is yours, Abiodun. You are welcome. We are glad to have you here this afternoon.
Yeah, thanks for the intro, Omolabake. That's very much appreciated. Hi, everyone. It's good to be with you guys today. The discussion today is to talk about proper financial management. Under that, we'll be looking at expense management, proper internal control, and revenue management, right? I'm super excited to be here because this is one of the subject matter I'm passionate about talking about. If you connect with my profile, I'm also passionate about supporting startups, doing great things using technology or trying to create a process to solve a particular problem in the society. So for me, that is what I stand for, helping businesses to make informed decisions using financial data. And so we will just go straight into today's presentation. And the aim of today's presentation is to support everyone on this call to help you understand how to implement efficient expense management system, how to create effective internal control for your revenue and your financial management system, and how can we adopt best practices in terms of financial management in our respective business. Then this, at the end of the day, which everyone on this call should be confident and should have gotten a good exposure into how to do financial budgeting and reporting. So I'll try as much as possible to make the presentation very practical and simple for everyone to follow. I know everyone here have background in fashion. So I'll try to bring it down to your level so that you can understand what I'm trying to communicate, because that way is when you can then appreciate what we're talking about on this call. Yeah. So before I start, what is financial management to a layman, right? What is financial management? Financial management, in my own opinion, should be a practice, and practice could be your process by which you manage your company finance, right? Not just managing the finance in a way that helps you become successful as a business, right? And beyond becoming successful, you also want to stay on the right side of the law. So your financial management systems also make you compliant to regulation in your respective business jurisdiction, right? So if there are two things you can take from that definition, is a practice because it should be part of the DNA of how you conduct your business as business owner, and beyond being a practice, it should make you become successful and stay compliant to regulatory requirements in your respective jurisdiction. And the goal of financial management is in threefold. The first one is to make the business accountable, right? There's a bit of background noise from somewhere. Make the business accountable, right? It gives credibility to the business in some way. And the last bit of financial management, it helps you as business owner and with your management team to make informed business decisions. So it's very important, right? So financial management is quite big and it has different numerous elements, right, in it, right? One of the elements is account payable. When you talk about account payable is how you make payments to your vendors, payment for your operating expenses, right? And one part of what we're going to be discussing today is expense management. So expense management, in other words, you can tie it to account payable. That's one aspect of financial management, right? So let me break it down this way. If there's one thing you need to take out of this call, financial management is about how you manage the money that comes into your business and the money that go out. Simple, right? And what we want to talk on this call today is how to create a system that will help you to manage the money that comes into your business and the money that goes out, right? One element of that process we're about to talk about is expense management, which is part of account payable. Account payable is money you pay to your vendor for buying materials that you need to design your fashion product or your fashion solution. It could be money you pay to a vendor for supply for your office, money you pay to a vendor for raw materials, etc. Beyond vendor, it covers things like your operating expenses, travel, office utility, stationery, your office rent, etc. So what we are talking about now is how do you manage, or what kind of system do you need to put in place to manage all of what I've just explained? So that's one element of financial management system, right? The other element has to do with account receivable, yeah? In other words, it's what we call your revenue. Your revenue is the money that comes into your business. I've spoken about expenses, which is money that goes out, right? Now, I'm talking about revenue, which is money that comes in. In accounting world, we call it account receivables, right? Things like your invoice to your client. How do you prepare your invoices? How do you ensure when you issue your invoices, you are collecting money on time from your business, right? How do you then have a system to manage that whole process, right? That's one bit of that. Another thing I forgot to mention when I was mentioning expense management is even the payment you make to your staff is part of the expenses you incur, right? It's part of your expenses. So there's need to have a payroll system to manage that as well, right? So I've mentioned account payable, which talks about your expense management. I've mentioned account receivable, which talk about your revenue. The other bit that is very important is tax payment as well. You need to have a system to be able to show on a monthly basis, this is what you are paying as your PAYE, pay as you earn. This is what you need to pay on your income that you've earned as a company, and that's corporate tax, etc. So I've mentioned 3 elements of financial management. The first one, account payable. The second one, account receivable. The third one, I talk about tax, right? And all of these are very important for us to understand those elements, right? Once we understand that those elements of financial management, is it easy to create a system to manage them? One thing I also need to mention on this call is when we create all of this system, when we create system for expense management, we create system for revenue, what is the end goal at the end of this? What you end up having, once you have all of this system, is you will have created a tray, a audit tray of useful data, right? Financial data. And those data are what you then need as a business to know how you are performing, number one. You sit on a round table with your management team every month to say, okay, based on this data, our financial performance, this is where we are, right? That is one bit of having a good financial management system. So you are not just running your business without having a good clarity about how you are performing. The other side of it is giving you insight about what performance is. The next thing is you then use it to make decision in 3 areas. The first decision is operating decision, right? How do we ensure that we stay within our budget, etc.? Then the second one will then be decision about investing in your business, right? We need to buy laptop for our staff to work. How do we buy those laptops? We've secure a office space, for example. We need to renovate the space. We need to give it a bit of facelifting and all the stuff, that's invested. Then financing decision, where do we get money to finance our operating expenses? When due, or other financial obligation when due. So those are everything that financial management, helps you to manage. Now on this slide, one of the biggest reasons why good businesses with very fantastic business solution fail is because they struggle to have a solid financial management system, right? I was talking to some startup a few years ago about why it is important to have financial management system, right? About between 20 to 30 of them, 50% of those startups said, we don't need financial management system because we don't have an accountant yet. So there's no need to have it, right? And from that survey, you're saying there's no need to have a financial management system because you don't have an accountant, right? Let me tell you, there are 2 decisions business owner is going to make. Once you set up a business, there are 2 major decisions you make. The first one is you get to a point you have to set up your board of directors, right? That is even very essential because at some point you are going to be looking for investment into your business, right? The people who are going to give you funding will say, we want to see a board that can give direction to the business, right? At some point in time, right? The second decision you need to make once you have your board is the board will then have to appoint, that is part of the fiduciary role that every business owner and shareholder needs to make. You need to appoint a secretary. After appointing a secretary, you then need to appoint an external auditor, right? That is very important. Every business at some point will make that decision, right? To appoint. And when you appoint an auditor, what they want to see is a financial management system that has an audit trail to keep track of your transaction, to prepare your financial management reporting, etc. Right? You can see why it's so very, very important. On top of that, things that comes in is financial governance. You have a good financial management system, right? That's financial governance. It puts you on a good pedestal for good corporate governance as well. So you don't have to have an accountant before you start keeping your books. The good thing is we are now in a world where technology has taken taking care of a lot of stuff for us. So a lot of finance operation can now be automated. So you don't need to really hire. All you need to do is to subscribe so an accounting software. Then based on that, you can, even you as a business owner, you can start keeping your books. And what we found in recent time is a lot of startups that set up business, they are usually set up their business in group. You have the CTO and you have the CEO, you have someone with finance background, someone with business background. So you don't need to understand all the nitty-gritty of financial management before you keep your book. Yeah, you can start from basic Excel to track your expenses, to track your income. That is very important because from the get-go, you are keeping a trail. So that's my response to the 50% that says, oh, we don't need financial management system because we don't have an accountant, right? Yeah, the other 30% then said, we have not started making money, so we'll defer that process until when we started making money. So there's a thin line between a successful business and one that actually failed. And that thin line is, having a solid financial management system. Yeah, financial management system can make a good and successful company. Not having it can expose a company to a number of risks. The biggest one is you can go out of business if you're not careful, because you won't understand how to manage your money. You won't understand what are the dynamics of raising fund, and that can get you out of business as quickly as possible. Not having a top-notch financial management system can also reduce your ability to run a financially and economically viable business, right? For you to be able to run a viable business, you need to have this financial management practice in place. Why the final 20% said, we have a compelling business model, right? Business idea, we don't need financial management system. My response to that is, you can have a fantastic business model, which is good. Your business model over a number of periods will be tested, right? You will hear people that are in marketing strategy, product market fit, right? So when it's tested, the good way to ensure that you are continuously improving your product, your revenue, your internal control, etc., is having this financial management system that you can even use to double check your pricing. Am I using the right pricing for my product? How am I charging? Is it subscription based, etc.? But you need to have a good financial management system that you can even make decisions just looking at your financial numbers to make those decisions. So you're not making decisions blindly. Yeah, so that is one area which I think every business owner needs to pay attention to. You do not have to be big before you have financial management system. I will even advise, it's very important you start keeping your books from the very first day of incorporating your business. If you just start from keeping your book in Excel, keeping it, depending where you can then have a very top-notch financial management system or accounting software to keep your book, and you go from there. But from the get-go, you're already keeping a audit trail that you will use in subsequent year. Yeah, so we're going to have what's it called? A quick group exercise. I want people on the call to please tell me in the chat, what tool do you use to manage, or do you use to handle your financial management or your finance function in your industry? I know a lot of you are in fashion and textile accessory business. So I would like to know, what sort of tool do you use and why did you choose that tool? So I will leave the floor open to hear people to understand the tool you're using, and then we can take it up from there. So few minutes, let's quickly just put our comment in the chat area, so we can take it from there. Fantastic. So I've seen a number of comments, and it's really, really, what's it called? Encouraging. It's really, really encouraging to see people using a combination of using different tools. I've seen Excel, I've seen I've seen Sage, I've seen QuickBook, I've seen Wave, and yeah. So I'm not going to say whatever tool you're using is good or bad. And I saw people on the chat saying the reason why they use a particular system is because it's easy to use, which is fantastic, because the first thing you need to check is user-friendly. Is very, very important. The other thing you then need to check is, does it help you address your need, right, as a business, right? And it's interesting to see people using different tools, which is fine. So my response on that is, at the early stage where you're setting up, right? I know you might not have a very strong war chest or budget to be able to acquire any of those robust financial or accounting software. Yeah, you can start with whatever you have, but the caveat is this. Excel has its own advantage, numerous advantage, don't get me wrong, numerous advantage, but it also got its own limitation, right? It got its own limitation, several limitations, and number one, it could be prone to error because you are doing it manually, really, and it's not intuitive. By intuitive, I mean, for example, in your Excel, you capture, oh, I paid XYZ Limited for the purchase of stationery on the first day of December 2022. That's all. It's manual. It doesn't help you categorize that expenses into the different, into the different, expense category, you know? So it might not be that very intuitive to do that. That's one limitation of Excel, because it's manual, it stays, it remains manual, except you are building a very complex and high level Excel template to be able to do that. There's a lot of Excel template out there that you can use, but that's one of the limitations. For those who are already using accounting software, I will stop mentioning accounting software name because I'm not trying to market any accounting software. So it's also fantastic because what you've done in that instance is you've already started automating your financial management system, which is fantastic, which is a very, really good start for your financial management journey, right? So I've seen the tool, I've seen the reason why you guys do it, but my own comment on that is what determines the kind of tool and the kind of and why you chose that tool should be based on the need of your business at a particular point in time. By need of your business, let's look at this slide, right? You can see this slide gives you a very good understanding of the life cycle of a business, right? Every business, we always start from startup, early stage, right? At that early stage, you have staff maybe under 10, right? At that stage, what you're actually doing at this stage, the biggest decision you're making at this stage is you are making a combination of operating decision, you are making investing decision, and you're making financing decision. Those are the three decisions you're making at this startup stage, right? And at this stage, that is where you need to get every process is right? At that early stage, because you are raising funds, you're looking for funds to fund your business. A lot of business organization or the people you are talking to about raising fund, be it equity, be it the different kind of fund you want to raise, Series A, Series B, etc. They are going to carry out due diligence on you to ensure that if we give you this money at this early stage, we want to ensure you have a very good, financial management system, right? When they carry out that due diligence, they don't want to see Excel, right? Yeah. They don't want to see you using Excel to keep your books, right? Because that won't give a very strong credibility to the business, right? It won't, right? And what I'm saying in essence is at that early stage, it's very important to also think about the people you'll be talking to about raising funds. Except you have all the funds you need to run your business, then it's fine to limit it to Excel. But Excel is manual and is prone to error, is not intuitive, except you are very proficient in developing complex financial reporting system using Excel, except you are very complex. And it's not the reason I wouldn't even encourage Excel is because it's prone to error and it's not very intuitive, yeah, and dynamic, right? So for me, if you're already using accounting software, it gives you a very strong credibility when a due diligence is carried on you, because whether you like it or not, if you're looking for funds and if you're talking to investor about two things they are going to look out, do you have the right structure to be able to receive the fund you are requesting for? Do you have the right team to manage the business? Those are the top two criteria they will look. Yeah, your business model is good. Yeah, model is good, but if you don't have the right team, you don't have the right structure, right people, your business model or idea might not really go far. So first thing you need to know at that early stage, you are making financing, you are making investing, you are making operating decision. Those three decisions is what you are making. So it's very good to have it, to get it right. Yeah, automate that process as much as possible. Like I said, you do not need to hire an accountant at early stage if you don't have the resources. That's what I mean. And there are two things you can do. I've seen startups that outsource that finance role, right? I've seen some that also even hire a finance person, a finance professional internally to hire. But at that early stage, I completely understand. You might not have a strong war chest, right? You can automate the process. And by automation, we've seen accounting software, all you need to do, it comes from expense management to the process of even keeping your books. All you need to do when you incur the expense is take a photo, right? Once you take the photo, upload it capture all the description of the expense, the amount, and boom, it's classified to the right, expense category. And before you know, your book is classified, you're having a P or L, you know. Technology has made it easier to do all of those, right? I'll be careful not to mention accounting software because I'm not trying to market any of them. But there are many of them out there. If you need to automate your financial management process, it's very important to get it right at the beginning. So you run your business between 5 to 10 years, right? You've grown. And at that point, when you're growing, there are two things that come to mind. Are we expanding to another location? We've actually seen enough in this market. How can we diversify into another market? So that's growth, you know, you're trying to expand. And growth can also come from you expanding your operation, expanding your team, right? You've grown from just 0 to 10 to about 50 to 100%. That's growth, massive growth. At that growth level, you will also, right, be making those three decisions: operating decision, financing, right, and what's it called, investing decision. Those three decisions you are making it. When you get to maturity stage as well, we've seen it all, right? Is it the right time to get to exit, right? Is it the right time to reinvent the wheel? And if you don't do all of the first two, perhaps decline. And the wish of any business owner is not to decline. It needs to get your business to a level where you can exit successfully, get people buying over your business, and you can do some other thing. But this is just to carry you through, to talk you through the life cycle of every business, right? And it's very important because what makes your business sustainable is you having the right financial management system. Yeah. We can't keep talking about it. It's just very important, you know, because every other thing you do within your business, dial and key into that, having a solid financial management system, right? It's very, very important. And I mean, having it is one thing, but being able to use the information that have gone into the system in the right way to be able to make decisions, to be able to accelerate the growth of your business and performance is something that is really, really important from that system. You know, you want to get to a level where on a daily basis, you can keep track of the money that comes in, money that goes out, right? And it's very, very important. Expense management is one of the biggest problems of startup. It's even established business. Ability to manage your expense is the biggest problem. And the best way to do it is to automate that entire process. And the cost is not that expensive, right? It's not that expensive. Yeah. If you go out there, there's a lot of solution out there you can use to automate that process. It's very, very important. So if you do this, what are the benefits? It gives credibility to your business. It puts you on a good pedestal to be able to raise funding, right? Because you have all the structure, right? And it gives you that confidence to talk and tell the story of your business using number, and that's why it excites investor, right? When you talk about your business, they want you to justify, use numbers, as much as possible. This is our budget for this year. We've been able to, in terms of revenue, we plan to generate about $500, in year 2020, but we've been able to do 70% of that. This is what worked, this is what didn't work, and this is our plan going forward. Fantastic, right? You can also tell your story. Oh, when we started with 1 employee, this is where we have. We've grown from 1 to 10 employees, and with the 10 employees, this is what we're able to do with your funding, and this is where we have. Fantastic. So you're able, it gives you that confidence at every given point in time to be able to tell your story, right? Yeah, very, very well and conveniently, right? Another problem that startups have is budgeting. We are going to talk about that in the course of this presentation. So let me move to the next slide, right? Now, at this point, we want to talk about the element of financial management system, right? That is very important because that's one thing for you to create a system. And when you are creating that system, you need to factor in the need, the reason why you created that system in the first instance. That system should help you address certain issue within your finance business function. So that is very important. So any system that you create, you should be able to use that system to plan projects. How do you convert your business target, your idea, and quantify that into a number? How do you put number behind whatever plan you've set up as a business? That's where financial planning comes into play, right? Financial planning is very important to get everyone on track in terms of where we are going, in terms of direction. Yeah, this is where we are going, and this is everywhere we are going to ensure that we become successful. At the beginning of the year, in fact, this is the right time to start your planning, right? We are going into the new year, right? How much revenue do we expect to generate, right? Or how much have we generated in this current year? And what do we need to do better in terms of planning? Now, and when you are planning, there are 3 sections of your planning, right? Your planning should be able to cover your operating need. Yeah, that is where things like operating expenses come into play. Yeah, what is our total burn rate in terms of employee? How much do we look in terms of personnel costs? The second one is office rent. What is our budget for office rent? The other one is other operating expenses. So when you are doing your planning, you need to capture your OPEX, that's operating expenses. You also need to capture your CAPEX, right? What sort of capital expenditure do we look to incur in the coming year? So that is also very important. Your CAPEX, that is OPEX is your operating activities. CAPEX is your capital expenditure, and the last one is your financing activity. Yeah, we've seen our operating expenses that we need $1 million to be able to cover our expenses. Where's the money going to come from? That is financing activity. You're trying to, evaluate: is it equity? Is it debt? Is it what else? How do we get the funding to cover these operating expenses? So you're not just developing a plan without having clarity on where the inflow or the funding is going to come from. So in the course of this presentation, you will hear me using financing, operating, investing. Those are the 3 decisions you will make in terms of financial management. So the second one is now our financial management system itself. So your financial management system should be able to help you take care of expenses, right? The reason why expense management is so important is it gives you control over your spend, right? Increase your accountability, right? Funding has been given to you. You've used it for the objective by which that fund has been given to you. accountability, expenditure accountability. The last bit of why financial management system can help you manage your expenses is important is, I've mentioned credibility, I've mentioned accountability. The last one is it gives you insights of where your money, your funding, or your capital is being deployed. That is for expense management. And under that is also we can put in what we call in financing term account payables. Another system that you need to create under financial management system is what we call account receivable, your invoicing. How do you do your invoicing, right? You deliver work to a client. Do you leave it open-ended, right? You deliver work, you need to send in your invoice. Invoice is just a financial document, right, that states the service you've carried out, your rates, and the total amount you're expecting from the customer. Yeah. You need to have a system that helps you develop invoice in a very simple and easy manner. It should be part of your financial management system. The other one is your payroll, right? How do you handle staff payment? You need to have a schedule for payroll, right? You put all the list of your staff. This is what you are paying them. This is the tax deduction. This is what we are paying to the government. If you do these three things I've mentioned correctly, what is the benefit? You stay on the right side of the law, you are compliant. Investor want to see that. Investor want to put their money in a company that's compliant, right? Being compliant saves you from a lot of stuff. It means you are reducing your risk exposure, right? You're in good time with the government, you declare your tax, you've paid your tax, they're giving you tax clearance, transparent and everything. It gives you that very good platform in terms of risk management. And it also makes you to have effective operation. When you have all this system in place, we've delivered work to clients, we need to send invoice, you send the invoice at the right time. The rule of thumb in finance is this. Let me give you guys some, will I say tit chat? Is you collect your money in from your customer as quickly as possible. Yeah, in finance, we say within 30 days, right? Then you can, for lack of a better word, you can delay payment to your vendor as much as you want, or you can hold it to the period where you collect money from your client, then you can pay your vendor. Imagine you've not collected money from your client, you're dishing out money to your vendor, then you will have a very tight cash flow. Don't get me wrong, I'm not saying don't pay your vendor, but there has to be a good balance between your ability to collect money in and your ability to also pay money out. It's not about what is going out alone. You also need to pay attention to what is coming in. So you want to delay what is going out to a point where you have collected enough, at a very short period of time. Then you can look at it, we have enough, okay, let's fulfill our financial obligation. Also, it's very important you keep your vendor happy and all the stuff because they're also your partner when you are conducting your business as well. So there has to be a good balance between money in and money out. So I will use that term a lot. That's a layman word. Money in, money out. Yeah. So let me cap what I've said around financial management system. It should help you manage your expenses. That's one of the things we should be talking about on this. And also the question now is, we are talking about expense management. How do we manage this expense? What kind of document, what kind of trade do we need to create to manage our expenses? The very basic thing, even if you don't automate that process, one thing that is very important you need to get right to manage your expenses, you can also automate that if you want, is there has to be audit trail for everything. Early stage startup, we have this document called payment voucher. I don't know if you've heard about payment vouchers. Payment voucher is what you use as supporting document for every spend you make, and it is a good way to have audit trail for your expenses. Before money goes out, you raise a payment voucher, right? You get the payment voucher can be raised by maybe the admin officer or a procurement person or so. Then it goes to the CEO or one of the directors to approve, right? You have the date, the purpose, the amount. So you can even save that in your drive as supporting document. When you pay that money out, things will come back. Receipt for payment, invoice quotation. You keep all of those figures are very, very important. They are very, very important for your planning. Because when you are doing planning, you rely on historical transaction. In year 2020, we will spend this amount of money on travel. So therefore, I'll put inflation on this. This is what I think we will spend. Budgeting is all about estimating, forecasting. So you need to do a bit of assumption, putting a bit of assumption into that. And the best way to do it is your historical number. So which is why it's good, you need to have a very top-notch audit trail to be able to do that. Financial control. Why is financial control very important? Financial control is very, very important because that is what, for three reasons. It's important for effective operations. It's important for compliance. And it's important for risk management. That's why financial control is important, right? And the best way you will know whether you have a good financial control or not, you don't have to wait until when someone tried to do something funny with your financial management system, right? If they try to do something funny and they get away with it or they are successful, it means your financial management system is not top-notch. If someone attempts to do something funny and your system is be able to capture it as quickly as possible, then you can say you have a good financial management system. Yeah, control. How do you put in good control? Good control starts from the fact that, you have system that minimize operating error, right? Operating error in the sense that you can see we started from financial management system. Let's take a typical example. We've delivered service to our customer, we've delivered a goods, or we produce what's it called? Clothing. We produce a clothing for a client, and we're about to invoice the client. And in invoicing the client, the person responsible for doing the invoice input the right amount. One of the reasons why that will happen is because the financial management system is not solid. Because if it's solid, the invoicing system will have captured what has been done, what has been delivered to a client. So the control process will minimize any operating error. Operating error can be something you're trying to key in a figure, is not correct. So before it goes out, someone is checking, those are control. And control when it comes to payment is the approval level you put in place, right? Approval level on how money even leave your bank account. I'm going to say something now if you're a business owner. If you are a business owner and everything within your organization in terms of finance rise and fall on you, you are the one that will do the budget, you are the one that will approve the budget, you are the one that will release fund, you are the only one doing everything. That is not a good financial management system, in my opinion. A financial management system that have a good control should have element of segregation of duty. That is very important. The person who prepared the requisition should be different from the person who approved, and should be different from the person who actually received the fund. That is complete segregation of duty. That is what a financial management system should reflect. If there's one thing you need to have in mind when you are setting your system, element of segregation of duty. That is what excites investor as well. Yeah, you are not setting up your business to please investor. You are setting up your business to make you as a business owner accountable, to make you responsible, right? To give you that strong credibility and confidence to talk about your business, right? So beyond just doing things for investor, you also need to know that it's one of your role as a director or as a shareholder in a business to make sure you have a good record. If you look at all the company house or incorporation company in different countries, one of the role of business owner is to ensure that you have a top-notch financial control and you have a good record. Good record is very important for your business. So that's what control helps you to do. It helps you to minimize error in terms of operating error. Your exposure to risk is reduced, and it puts you on the right side of the law. So the final element of your financial management system is, which is very important, performance review. I started by saying whatever system you create should help you make informed decision, right? Informed decision around performance, informed decision about the growth of the business is very important, right? Informed decision is we need to make this investment. what is our financial data telling us? You can't make investing decision without considering what the data is saying. So it's very, very important to have this financial management system in place. And at the end of the month, at the end of the quarter, at the end of the year, like we are, we want to sit around the table, the CTO, CEO, marketing manager, product designer. Okay, where are we with terms of performance? It doesn't have to be financial performance alone. It can be about the goals we've set, but that has implication on your financial record as well. So that is what we should be aiming at, because the ending point outcome is whatever you say should help you, should support the growth of your business, should make you profitable, should reduce your risks, and make you stay on the right side of the law. Don't forget, I mentioned when we started, financial management is a practice. It should be part of the DNA. It should be part of how you conduct your business internally. And if you get it right internally, people that are external or all other stakeholders, once they see it, they know that, oh, this business has credibility. They have the right structure. Let's put our money in there, right? So let's move to the next slide. The next slide, please, guys, please don't worry about that I'm talking too much. It will get to a point where we'll be doing a lot of exercise, and I would like to hear from you all as well. So I don't want you to see, oh, I've been talking for the last 45 minutes. It's going to get to a point where I'll be hearing from you all as well. We have a group section, we have a case study we looked at as well. But all of these are very important for me to lay the foundation to where we are going to. And once we understand all of this, the other thing we then need to be talking about is, okay, you've said all of these things. What are the templates? What are the tools out there for us to use to be able to achieve all of this? So it's very, very important for everyone on this call to appreciate what we are discussing, because that puts you on a very good, it puts your best foot forward, yeah, for lack of a better word, best foot forward in front of all your stakeholders is very, very important. So that's what we should have in mind, right? Now, what are the best practices in financial management, right? And I'm always very happy to talk about this, because that is what makes it very good. A lot of time where I'm asked to review, because before any investor we invest in a business, a lot of those informed decisions, they will rely on financial experts like us to look at startup deck and advise them, should we invest in this startup or not? And this is what we look at. Yeah, this is exactly what we look at. And if you have a system that connects to all of what I'm about to say, yeah, you're already a very good company, or you have a system or a structure that sort of connects with investor and that can receive investor money and do whatever you promise with the fund. The first one is register a company, right? In the past, I saw a startup that were still running their business without even incorporating a proper company, right? They wanted to receive money in their personal account. No, you cannot commingle personal fund with your company fund. That is why it's good to incorporate a business, a company that can stand as a legal entity, a company that's a going concern, a company that can run a financially viable and economic business, you know, a company that can sue and be sued. You understand that if you have a background in commerce or business, that's what we mean by legal entity. You know, yeah, there's a hand raised up. Maybe I need to pause to take question. Salisu Uman, yeah, the floor is yours.
Hi, Abiodun. I think you can carry on with your session. When it's time for questions, we'll take the questions in general.
Absolutely. Thanks a lot for that. Yeah, I appreciate it. So you have to register a company, incorporate a company. It could be a sole proprietor. Yeah, it's fine. That's one type of business organization. As long as you have a company name, right? Yeah, it's important. Another form of business organization is limited liability company, right? That you are required to have a director and you will have responsibility to your board of director, etc. Then there are other forms of business organization that you can incorporate in different jurisdictions. Yeah, you know, I mentioned it could be a sole for your kind of business. We could see a sole proprietor, but it's very important to have a registered business name. Once you do that, the next thing, these are elementary, but we see some business that miss out on some of these practices. Yeah, and when I'm talking based on what I've seen, based on the facts that are out there, and these are what we look at when we are reviewing a business from financial management standpoint. Open a corporate bank account, and when you open a corporate bank account, interesting thing about that is, you know, I mentioned earlier, if you are the only one approving payment, releasing payment, doing everything, the mandate for your bank account is solely on you, then I'm not sure you have a good financial management system. You need to open a bank account that have a mandate. The mandate will be that this person can approve from this amount to this amount, right? When it's above, let's say, $1,000, then you need maybe 2 signatory or 3 signatory to manage your book, to manage, to give approval for your expense and all those stuff. Investor wants to see that again. They want to be sure that that's segregation of duty, that is what's it called, control, and this one element of control, right? Yeah, to make sure the business remain as a going concern and as a sustainable business. I've mentioned financial forecasting and planning earlier. I cannot overemphasize that. It's very, very important, because that is where you convert all your business idea, your vision, your objective, and you put number around them. You know, it becomes a, what's it called, a forecast document, and it becomes a financial plan you can use for a number of years or a number of months that you have. Accounting management system and processes, those are practices, those are systems you need to put in place. This is very important, because that is what it gives indicator about your financial governance. What is financial governance? Financial governance is how you collect financial information, how you manage them, how you control, and how you use them to track performance, to track growth, your profits, and everything, and make informed decision. I keep saying informed decision, because that is the objective of any financial management system, to support the business owner in making informed decision. Statutory compliance, you need to check your tax obligation in your country, and know things that are common is the PAYE, personal income tax. In Nigeria, there's tax authority. In Rwanda, in different countries, there are different requirements for that, but you need to pay attention to that. Have a payroll template where you have all of these things in there. And the second to the last, internal control. I've talked about that as well. It's good to have a system. When you have a control here, when you open your bank account, you have control, right? It supports this internal control, because there's segregation of duty, right? Internal control about also how expenses is being approved. So you don't have a case where, for lack of a better word, you can eliminate or reduce fraud, misrepresentation. That's the right word I was going to use. Yeah, an internal control doesn't have to be anything very sophisticated. It could be somebody who is responsible for approving, just asking the right question. And that can eliminate any fraudulent activity. Just one question, right? And again, I will encourage everyone on this call as business owner to have a policy, a written policy, right? You can have this system, you can have all of these things. If it's not documented, right, in a written policy, I'm not saying have a written policy with 100 pages, 1,000 pages that's difficult to understand. Could be 2, 3 pages, 5 pages, 10 pages that articulate what your financial processes are. This is the process for fund disbursement. This is who approved. This is our reporting requirement, etc. Right? So at least one policy you should have is your financial administrative and procedure and process policy is FAPP, something like that. Or you can have it in your own word, financial management policy. You know, that you can use to support whatever system you've put in place. To tell someone who is not part of your business, like this is how things is being done. Yeah, that is very important. Another policy you could have, if you get this policy right, this procurement policy right, how do you conduct your procurement so that an internal staff is not just bringing a vendor to do all the business and all the stuff. Best practice in that is a call for proposal, a call for quotation is sent out. You pre-qualify a number of vendors and you narrow down to 3. From that 3, you select the preferred one. The policy that speaks to that as well. And financial performance, I already mentioned that. The end goal is to sit around the table, look at what worked, what didn't work, what are the deviations we've seen, and how do we address this deviation going into a new month, going into a new year. Yeah, absolutely. So that is very, very important. And I'm happy I'm sharing this with you all so that we have, if you get the basics right, I don't think it will be then be difficult to have a structure of financial management system. So the next one is, how do you do financial projections? Yeah, and this is another thing we see in deck. A lot of deck will see, there's a concept we use when we are doing financial projection. You call the sum, the term, and the sum. The term is the total available market, the global market, right? For example, you are in a fashion business that has a global market. And that global, the worth of that, the size of that global market, let's say, is 20 billion. When you are doing your financial modeling, especially around your revenue, there are a lot of stuff you need to pay attention to. The first one is the market I want to operate in. What is the size of that market? The size of the market is not what you use as your revenue projection. That cannot be realistic because it will be too aggressive to say you want to capture the entire market. So you need to come down to serviceable available market to look at it and say, okay, out of this global market, I'm operating from, let's say, Kenya, for example. What is Kenya market, or what is the size of fashion market in Kenya? So let's say out of the 5 billion globally, in Kenya, the size is like, let's say, $1 million. That's for Kenya. So you then need to narrow down from this $1 million, what can I achieve conveniently as revenue? And that is called the serviceable obtainable market, right? So it's the serviceable obtainable market you then use for your revenue projection. So I'm speaking too many technical, let me come down to a layman perspective. What I'm saying in essence is this. For you to do your financial or your revenue projection accurately, you need to take a top-down approach. Start with the market size, right? From that market size, you then need to identify a particular segment, right, of that market size. So the third thing you then need to do is extrapolate to calculate the total potential revenue. And the total potential revenue is the serviceable obtainable market you can obtain for Kenya. That is what goes into your projection. Another way business do their projection is they use marketing term like, what is it called? Customer acquisition cost. They use lifetime value. They use the number of user, right, versus number of paying customer versus number of returning customer, right? So all of those information, I'm sure from your ad, from your, your website you have from your business, it can indicate the total user of your product. The fact that you have 1 million users, it doesn't mean that the 1 million user, the one paying, they are all paying for your product. You need to narrow down to look at the user that can conveniently pay for your product. And those are what you then narrow down into your revenue projection when you are doing your revenue projection. So it's very important you take into account the number of user. When taking into account the number of user, you look at the returning customer as well. right? The returning customer is very important because those are returning customer. They are the one that will speak about your business to more customer, right? To increase your user base or your customer base. So those simple information, a lot of time, they are overlooked when we are doing financial projection. So the mistake we see in a lot of debt is we see startup using this figure, market size, the global market size, for their revenue projection. That is not really accurate. And I think it might be a bit misleading, not give a true information about the ability of a company to actually generate revenue, right? Another approach that we see companies use is the bottom-up approach, right? With bottom-up approach, you start with project revenue growth over the next 1 to 3 years, right? And for example, this is how you do that. And I like the bottom-up approach because it makes your revenue projection more realistic, and it makes your business a bit very resilient. And I'm going to talk more about resilience in the course of this presentation. So one thing that is very important, I need to mention, very important, you start with, for example, let's say the base revenue we want to generate for 2023 is $500,000, right? So you then need to establish on a monthly basis, what would that be? It's easy to just say, okay, we want to divide $500 by 12 to get what we should be generating on a monthly basis. Another way you can do that is to have a base case, you have a conservative case, and you have a best case. A best case for me, we say, based on this number of customers that I have, this is the trend I've seen. On a monthly basis, I'm generating, let's say, 20,000 naira. So on a month-by-month basis, what do I estimate to be my revenue growth? A rule of thumb would be annually, you can say 25%, divide 25% by, let's say, 12. It will give you a certain percentage. So you can then grow that your month one revenue, let's say $2,000 by that, what is it called, revenue growth on a month-by-month basis up to the end of the year. So that's a very neat way of doing your projection. And if you do that correctly, it will mirror the top-down approach in some way, because what you are extrapolating is to calculate the total potential revenue, your serviceable, obtainable market that you can obtain conveniently. You can achieve your revenue target conveniently, right? And you can start with a best case. You can then say, okay, I started with 25%. Let me even extrapolate with 30%. You can call that another case, conservative, or 30%. Then you can have the best case of revenue growth as high as 100% if you want. But the most important thing is you have different scenarios. And that's one of the lessons I personally learned during the pandemic, right? Where we saw a lot of business exposed, revenue projection reduced from even 100% to 0, right? The business that were doing or that were able to come out of the pandemic were businesses that were resilient in the way of doing your revenue projection, having the best case, conservative, and a worst case scenario. So that way, you know that if this scenario we are facing, this is my exposure, or this is the exposure of the business. If you are moving for a worst case to a best case, and this is what we intend to see. So having a scenario or projecting your business revenue using different scenario will put you on a better position. I will make your entire financial management system very dynamic and very resilient. You know, for lack of a better, I can use the word agile as well. So that way, no matter the scenario, you've already prepared for it, right? That is forward-looking, in my own opinion. So I just wanted to mention that so that we have that in mind. And again, another thing I need to mention is you also need to have in mind is your revenue is one thing. You need to establish the cost, what will cost you to generate that revenue. In financing jargons, we call that direct cost or cost of revenue, right? Rule of thumb is your cost of revenue should be between 30 to 50%, depending on your industry, right? For fashion industry, if you are producing a product, you might be heavy on the cost of procuring material and all those stuff, depending on what you're doing. And for me, your direct cost can be heavy as well, because if you put your overhead and all those stuff, it could be heavy. But a good way would be your direct cost should be between, I would say, 30 to 50%. So you have the remaining 50% to cover your operating expenses, and it leaves you margin, right, for your net profit. Your net profit should be around, yeah, for startup, I mean, no one will expect you to make that big profit at the early stage, but a profit between 5 to 10% net profit, you know, any after taking all your expenses or your EBITDA should be at that range, maybe 5 to 10. You can go higher than that depending on how you've performed as a business. So that's a bottom-up approach. We talk about the top-down approach. Now, I haven't talked about all of these things. How do we establish funding requirement for a business? How do we establish funding requirement for a business? Yeah, and that is one thing I think a lot of startups struggle to sort of understand. For me, I think the first way or the first course of action when it comes to establishing what your funding requirement as a business is to first of all put pen and paper to establish what do we intend to achieve as a business in the next 1 year, in the next 18 months, up to 5 years. But I would say narrow it down to 12 months, the first 1 year, right? Excuse me. What do we intend to achieve in terms of milestone? Your milestone can be in the first 6 months, you want to set up a good business with the right structure. The right structure could be employing staff, your dev team, your operation team, etc. So you put number to that, right? Employee costs, right? That's where employee costs come to. What would that be? The next thing would then be CapEx, which is called investing activity in some way, right? When we employ this employee, right, we are going to get them laptop, and even the office space that we've rented, we need to put some bit of facelift, renovate the space, you know, get some gadget equipment. What would that be? We need to even get some equipment, machine, to actually design and even so a lot of the product we need to do. What would that be? You put a number to that as well. And the next one you then need to do is financing. The money to finance all this operating activity and investing activity, where is it going to come from? Now, that is where we are going in terms of establishing what the funding requirements will be. So the first thing you need to do in terms of your funding, establishing your funding requirement. So this document we have in front of us is called a cash flow document, right? You can see the cash flow document start from January, February, March, April, up to December, right? The first way to start is you look at your cash receipt. That's the first way to start. That is your cash flow is a combination of your inflow and your outflow. Cash receipt is what is it called, your inflow. In January, what is our cash sales, right? In January, if it's 0, you put 0 in there, right? What is the amount of cash we are hoping to collect from our debtor? That's account receivables, right? If it's 0, you put that. If you don't have anything, put that. I'm driving to somewhere. Now, if you say your cash sales is 0, your cash collected from debtor is also 0. Other income, if you say is 0, then how are you going to fund your expenses, right? You are either going to fund your expenses from either equity or getting a loan from somewhere, right? So the first thing to establish is where the money is going to come from. If you don't have answer to that, the next thing you then need to proceed to is what will be my expenses in terms of cost of sales. Now, if you are telling us we started from cash collection from debtor and cash sales, right? If you are starting from cash sales, for example, we cannot completely say our cash sale is 0, right? We should have a projection somewhere, right? But what this template is capturing is in terms of cash that is coming in, actual cash, right? And actual cash can be cash you are hoping to collect directly for customer. And it can also be a combination of credit sale, which is what cash collected from debtor, that's credit sales. So you have credit sales and cash sale. But what I'm driving at is you will have done a projection to say, in this particular year, this is what I hope to achieve in terms of revenue target. Month one, I'm hoping to generate $1,000. Month two, I'm hoping to generate $2,000. Month three, $5,000, etc. You have a good understanding of where the cash are going to come from, right? That needs to come up here, right? Come up here, where the cash are going to come from. If it's completely zero, or you don't have an idea of where your revenue will come from, there's still a bit of work to be done. I will come back to that. Now, let's start with what is our cost of sales, right? For every revenue you generate, there's going to be some direct expenses in terms of we need to incur this cost to be able to deliver this, right? If we do not incur this cost, we cannot generate this revenue, right? This is called direct expenses. It means it's directly related to your revenue. If you want to generate revenue, you then need to incur this cost. So the first one will be purchase material, right? Purchase fabric, whatever you need to purchase. That cost needs to come here. And please, when you are putting the cost, it can be as simple as you getting a quotation from a vendor, etc., to understand what that cost will be. Assembling whatever material equipment you've got in, yeah, that cost needs to come in. Another cost that is very common in cost of your website, your platform to promote your products can also be one of those costs as well. Online payment for hosting, for subscription, could be, anything you have that is directly or that will increase your ability to generate this revenue up here is what you put here. One thing when you are doing your revenue projection, right, you can just start with a base case scenario to say, in January, I'm assuming my revenue based on all the track record of goods I've supplied or this customer base that I have is going to be $5,000. And based on that, I'm hoping that on a month by month, my revenue will increase by 5%, by 4%, by 10%. Yeah, so extrapolate that and model that up to month 12, right? Your revenue projection doesn't have to follow this template, but this is just a guide, right? And this guide is more like a cash flow document, which is good because a cash flow is what tells you what is coming in and what is going out. And another element, of course, you need to pay attention to is your cash expenses. Those are your operating expenses, right? In a layman perspective, this cost will be incurred whether you earn revenue or you don't earn revenue. A lot of time, startup company look up to investor to sort of cover these operating expenses. The tell investor we have this amount of expenses to cover. We need this XYZ amount of money over this period of time. So it's very important for us to be able to project what salary expenses will be based on the number of employees we have, etc. So just put all those costs, add it up, the cumulative will come here, right? Now you have a good understanding of what your direct cost is, what your operating expenses are. Now you're having clarity on what your funding requirements will look at. So by the time you combine your, let's even narrow down to operating expenses alone, because those are costs you need to cover whether you make money or you don't make money. Those are costs you need to cover to run your business, run your office as much as possible, whether you make money or you don't make money. So that will give you a good understanding of what your monthly burn rate is. So these total cash expenses on a monthly basis are what your burn rate is, right? And that burn rate over a 12-month period, by the time you had everything up, we know what you need for this runway. For the first 12 months, this is what I need. The other thing is now we'll have a good understanding of where revenue will come from, where expenses is going to. We then need to establish what cash capital payments we need to make. Yeah, are we buying laptop? Are we at that early stage? I don't think you are paying dividends, so just ignore that. But one thing I'm very I need to emphasize on is your, what's it called? Is your assets purchase, that's CapEx, right? You need to also document on a monthly basis. They are typically one-off payments, right? One-off expensive that you incur. So you can capture that on a monthly basis. This is my CapEx. So a combination of your total operating expenses and your CapEx will give you a good understanding of the total funding that you need for a particular period of time. Having done that, you will know what your opening balance is at every period in time. You can put your cash at bank in this yellow phase. A combination of the formula from this top, what your expenses are, will give you what your net cash receipt or expenses will be. Now, this is what you then need to model your funding requirement, right? If I'm not expecting to generate any revenue and my total expenses every month is $50,000, right? 50,000 times 12 will give you a good idea of what your funding requirement will be for the first year. So if you want to raise funds, that is what you should be talking to investor about raising. And other than that, you also need to pay in mind cost of developing your product and everything. You can also load those into, what's it called, cost of sales, wherever. You can use this space to do that, right? It will give you a good understanding of what your total funding requirement is. And those are what you need to start talking to investor about funding requirements. This is what I need from this point in time. This is what I need for the next 12 months. And you can even model to 2, 3 years, up to 5 years, right? Investor can say, okay, fine, I've looked at your debt. I'm happy to fund your operating expenses to cover your OPEX. I've looked at your debt. I'm happy to fund your CapEx to get equipment, to get this, you know. I've looked at your debt. I'm happy to fund all your operating expenses. So it gives you clarity on what you need in terms of funding and where to go. And who to talk to, right? So that is it about the cash flow or establishing your funding requirements. So the next one we've talked about all of this in my previous slide. What sort of system you need to create? Account payable, I mentioned. You need that to be able to track your check payment to vendor for payment you made, order, cost of raw material, etc. That is what account payable is all about. Inventory, your raw material that you bought, the payment that you make. So account payable is to help you to capture, manage your expenses. That's where expense management comes into. You know, I mentioned this when I started. Another word for expense management is account payable management. I also mentioned account receipts, bank receipts, your invoices, your order. So whatever system you create, you'll be able to manage all of these, account payable, your receipt, your payroll. I also mentioned that in my previous slide. Have a payroll is a simple Excel template, or if you have automated the process, you want to know all your staff. This is how much each person earn. This is a statutory deduction in terms of tax, in terms of pension, in terms of HMO or your private health benefit, maternity, etc. So the net payment is what you pay to your employee, and you also make payment of tax to the government or the relevant tax authority for you to stay on the right side of the law. You need a system to manage your inventory. Those are systems that comes out of your overall financial management system and filing of tax, etc. So any system that you build, if it's not working, be flexible to adjust, because one system that you build for this particular stage of a business might not work for the next stage. For example, if you start with a system in the first 12 years of your business, it might not work for the next 12 years, for the next 5 years. So you need to pay attention. You don't have to be rigid when you create a financial management system. One caveat with financial management system is for every system you create, you are creating a loophole for another. You are creating a loophole. So you need to pay attention. That means that every system is work in progress. You need to improve on them consistently. You need to have that ability to be able to spot what is not working and address it as quickly as possible. Another thing I wanted to mention before we go into the case study, because I don't think we have much time, is see your financial management system as work in progress. You know, we started by looking at the life cycle of business, startup, maturity, and then we look at growth as well. The system that work at the startup might not work at the growth stage, and the one that worked at growth stage might not work at the maturity stage. So you need to have that in mind. I also mentioned that whatever system you create needs to reflect element of segregation of duty as much as possible. So that is very important. We need to have that in mind. Successful business are business that are based or they are built on a very strong and solid financial management system. So now we want to dive into questions, we want to dive into case study, template, and etc. So the next slide is going to be question. Question is, who has any area of financial management in their fashion business that they would like to improve on? The other question is, if there's no question, then I can then move to the second bullet point. But at this point, I will leave the floor open. If you have any area of your business that you'd like to share on this call that you think you really need improvement as quickly as possible, you can share it, and I'll provide guidance from financial management best practice standpoint. Yeah, so now it's the turn to hear from you guys, and for me to engage you guys and see how we can improve our financial management in our respective business. Yeah, so the floor is open to you guys. Yeah, feel free.
Hi, Abiodun. We already have a comment in the comment section.
Okay, so let me go to the comments. So I'll just read it out from the comment section. Sorry if I've missed out anything. Where will I start from now? Let me take the first question I can see. I know you said you didn't want to suggest an app. However, as I'm listening, there are elements one wouldn't consider to list on the Excel spreadsheet. Which app, in your opinion, in your professional opinion, will you suggest which is user-friendly? I need to check with the organizer. Omolabake, if you're happy for me to share, like I said, I'm not here to market any accounting software or any platform. I will just mention tools that I've seen being used in industry, and some of them some of the people on this call have already mentioned. So if you don't want to use Excel, right? A platform that's out there that I've seen Wave, and you guys have mentioned it already. You mentioned it, it's not me mentioning it. I've seen Wave. I've seen on this call, I've seen Wave. I've seen Zoho. I've seen QuickBooks. I've seen what's it called? Yeah, those are the three ones I've seen. So Zoho, for example, I know Zoho have an expense management system that helps you automate your expense management system. And they also have different modules to help you manage your payroll, I think. And Zoho also have Zoho Books that help you actually manage your books, your financial management record, right? Zoho is one, and they got both the mobile version and the web version. So you can check out Zoho Books. There's also Wave. It used to be free at some point. I know now they've monetized it, yeah. There's also QuickBooks. You know, QuickBooks has been there for a long time. There's also Sage as well. So there's a lot of tools out there for you to manage your books, to automate your process. And these are used in the industry, and they are user-friendly and they are budget-friendly as well. So you can check it out there. And inventory is a very big issue for me. Leakage, oh wow. Accounting for my resource. Now, I like that. Inventory, in my own opinion, are material that you got, you then use to produce your product or your finished product. And I think it's one area you're asking the right question. It's one area a lot of businesses struggle with, right? Being able to have a system to manage your inventory. Like I mentioned, the app out there, I know Sage has a feature in their accounting software for inventory. You can also check out QuickBooks. QuickBooks and Zoho are very user-friendly, and they manage all of these things you are mentioning. Another thing I will say you should implement in terms of inventory is you have to do a periodic count of your inventory. That is very important. That's one thing to have it somewhere, but you also need to do a periodic, and this is best practices during internal audit. Even at the company where I work, we do inventory counts, you know, on a monthly basis. It could be on a daily basis if you have a staff that solely role is for inventory. This is what we've bought. I want to know what has been used. I want to know what is left. We then have a system to track that, right? And in terms of usage, it could be, you could apportion your inventory to different projects. For this project, Omolabake, I only just got 3 more minutes and we haven't done case study. And case study is very important for me. So are we going to be giving more time? Maybe just 5-10 minutes? I don't know. It depends on.
Okay, I think we'll just extend the class by 10 more minutes. So I think you can just delve into the case study. So what we'll do is all the questions that were collated in the chat will be forwarded to you for you to provide answers to, and we'll share with the participants. So I think we should just dive into the case study briefly so that you can have time to do that. Apologies
Absolutely.
to everyone. And
I'm so sorry. Yeah, I'm so sorry. I think the time is so, we don't have too much time for what I've been told to come and talk about. I can talk about this all day and I won't get tired. I've been doing it for the past 9 years. So we can keep going, but please, we only got 1 hour, 30 minutes. And I like to respect time so that I can have good record myself as well. So let's move to case study. The case study is actually straightforward and it can help us address some of your questions. I need you guys to help me look at this. This is a finance function of a, what's it called, for lack of a better word, hypothetical complaint. What's it called? A complaint that is not real. This is the finance function of the complaint. Can you all please look at this chart and tell me what sort of finance structure can you see in the business? What I mean is, we've talked about automating a lot of processes. We talk about manual processes, etc. What sort of finance business function does this company have? And what do you think the company is lacking, and which area do you think the company can improve? Just look at the chart. There's a lot of insight from it, but I want you guys to pick the insight, then we can talk about it. Please look at it very well. And you can just look at it and assume this is your complaint. What do you think is wrong in terms of account payable and the amount of time that I spend on that? What do you think is wrong in terms of account receivable? And reflect on everything I've said on this call. Does this finance function actually reflect what I've said on this call? So there's no right or wrong answer. The important thing for me is to use it as a way of starting a conversation to address some of the questions you have asked. So please look at it, feel free. I just need idea. I just want to see what you guys think. So just type in the comments, whatever you think, what kind of structure do you think
so here are comments from the comment section. Too much debt, little forecasting, little financial management. There is no strategy. There will be no growth at this rate. Somebody says management. Another person says that I think they fail to do a proper financial forecasting. They need professional auditing. Somebody says too much expenses is being focused more than revenue. The business is not yet viable as they are spending more than they are generating income and revenue. Somebody says lack of management, lack of cost management. Financial planning is low at 2%. Strategic financial management. They should be more tax compliant. Somebody says that high expenses that are in balance with income and revenue. No good balance between what is coming in and what is going out. No compliance focus. Too much time is spent on vendors, creditors, with little time on financial. That's actually several comments, anyways, and they are still coming in. More time on payables than receivables. Not good enough likely cash flows.
Thank you. I think one that connects with me is the person that mentioned something on 2% on what is it, financial planning and all this stuff. Now, I mean, I need to clap for everyone. It shows that everything we've discussed actually went down really well. And I think you've echoed all of the answer to to the problem of this company. The biggest problem with this company is it doesn't reflect a modern finance team. If you look, they spend too much time about what percentage. I have your this thing blocking the chart. I can't see the percentage on the other hand. So one of the biggest problem with this company is the finance team is spending too much time on manual expense processing, right? So they are still using manual process to initiate and approve their expenses. Don't forget, the intention of this call is proper financial management system, then proper expense management, revenue, and etc. Right? If you want to have a very top-notch financial management system, you need to automate your expense management system, which is the first chart you are seeing under account payable. The business spends too much time processing payments, and they are spending less time on strategic things like strategic financial planning, which is very important. That is where you even financial planning and analysis. That is where you analyze financial data, get insight from them, use them to manage your performance, your growth, etc. But they spend too much time on expense management because their system is in manual. So if you are using Excel, I'm sorry to say, that is where you are. If you are still using Excel as your financial management tool, that is where you are. You are spending too much time. Imagine if account payable can be reduced to just 2%. It then means that the team can focus on more strategic stuff. It means they will put more time into financial planning. They will put more time in the strategic financial management that pinpoint, oh, this is where we allocate resources. This is where we are doing well. This is where we are not doing well. So whatever system you need to create, make sure that is a system that helps you automate your finance operation, reduce your account payable activities to the barest minimum. Automate it. If you automate it, that means your finance team will only be spending maybe 2 or less than 10% of their time approving, because everyone will go on the platform, request their payment. It comes to the finance team, they approve. It comes to you, the CEO, you approve. So little time is being spent on expense management. So you've automated that process. So your finance team can then help you focus on, okay, where's the money coming from? If you are going to make this objective, this is what we need to do. The biggest one for me is the strategic financial management system. That is the role any finance professional you have engaged should be telling you. If there's one thing you need to be expecting from your CFO or from your finance team, is their ability to be able to give you projections and be able to tell you, explain the numbers behind those projections and tell you in the next 2-3 months, if you do not generate this revenue, this is where we will be, right? So that gets everyone back on the track to ensure that we are able to work together to generate this revenue. Strategic financial management is very, very important because you can also see where you are not doing well in terms of, oh, this is where we are meant to be generating a lot of money. You can look at all your products, product 1, product 2, product 3, product 4, and say, oh, product 1 is not really profitable. What do we need to do to get it onto track? Product 2 is doing so well. What do we need to do to make sure, we keep doing so well? That's where strategic financial management system is very, very important. So you want to reduce the time that your finance team puts on processing manual thing, reduce it as much as possible, and let them spend their time on things that are very important. Financial planning is very important. I've mentioned it's one of the best practices. How you build your product, knowing that how you build your product, one thing I need to mention as well is to establish the selling price of your product, you need to make sure that whatever selling price you are putting out there should be able to cover your costs, your variable costs, your direct cost of producing that particular goods. For example, if your business produce shirts like what I'm wearing, and it's costing you, let's say $20 to produce one shirt, and your selling price is $5 or $10, it's not profitable, right? You need to put a margin or a markup that can maybe 2 times or 3 times the cost of producing that shirt that you're selling. So I need to mention that as well. So your selling price should be greater than your direct cost, which is called variable cost in some way. So just pay attention to that as well. So you need to ensure that your team focus more on what matters, the big picture. Account payable, you want to get money in as much as possible. Make sure you're on the right side of the law, and make sure they also focus on financial reporting. Statutory audit is very important. If you are at that point where you have to be producing statutory financial statement. So it's very, very important. I want to echo this again. Don't forget, for a smaller business, how big a finance team do we need? So I'm saying for a small business, financing can be between 1 to 2 people, as long as you understand what those 1 to 2 people need to be doing. And any finance function or any finance department, this is what they do. They manage account payable, account receivable. So if you're having a meeting with your finance team, please, this is what you should be asking them. Okay, account payable, how much money have we paid out this month? Account receivable, how much do we expect to come in? Financial planning, can we see our projection? How are we performing against projection? Financial reporting, can I see your management account? Those are what you should be asking them. All these 6 to 7 items I've mentioned. In terms of tax, where are we? In terms of strategy, what rates do you see us, or which way or which area of the business do you think is high risk and which area is low risk? The high risk, how can we ensure that we minimize the risk, etc. So finance function is basically tie around what this chart explains. So if you are setting up a good financial management system, those are areas you need to pay attention to as much as possible. Thank you so very much. I think I'm really, really super proud of you all. The case study actually tells me that at least everyone was following everything I've explained. I thought it would be difficult for you to hack the case study, but from your response, it tells me that you will know what a good financial management system is, and you will know what a bad financial management system is. Thank you. I'm proud of all you guys. I'm sure we will surely connect in future. So thank you so very much, Omolabake. Let me know if I've missed out anything, and I'm happy to.
Thank you very much.
Yeah.
Thank you very much, Abiodun. There are loads and loads of questions, but because we are short of time now and we had to extend the class by extra 10 minutes, I don't know if we can just take one. Then other questions will be sent to you, and then we would expect the responses will be forwarded to the participants. So let's just take this question.
Okay.
Somebody is asking a question that is, for a sole proprietorship, is it expensive to open a specific bank account? Because I believe such accounts have standing charges.
So the question is, for a sole proprietorship, is it compulsory you open a bank account?
Is it expensive to open a specific bank account? Because I believe such accounts have standing charges.
Okay. So if I may have to come in here, the cost of opening a bank account, I know it varies in different countries really. Every month there's a flat rate you charge, but I think it's very important to have a bank account that carry the name of the business, right? In terms of charges, here in this part of the world, charges are based on the volume of your transaction, right? Yeah, you can correct me if I'm wrong, in this part of the world. Also in Nigeria, charges are based on the volume of your transaction. And the account management fee they charge at the end of the month is not really significant if the volume is not high. So the cost of, I'm talking from experience here, and you can correct me if I'm wrong, opening a bank account and the charges that will come from there is based on the volume of your transaction. So I don't think it's going to cost arm and leg to open a bank account. So, and I think it's very important to open a bank account. So I really do not have an answer to what the charges would be in different jurisdictions, but this part of the world, the charges are not cutthroat, in my own opinion. So it's very important to have that bank account. Yeah.
Thank you very much, Abiodun. So because of time, like I stated the other time, we will not be able to take other questions on this call, but we will share the questions with the facilitator, and he will do well to share the responses to the question. Thank you very much, Abiodun.
Yeah, one last thing I need to mention, Omolabake, there's a link in the slide for templates, just in case people need to understand the different financial reporting. Go to that website, you can download, it's free. I go to the website sometime when I need to create a financial management system for startup quickly. Yeah, so you can go to that site. Thanks a lot.
Thank you very much, Abiodun, for that. That was very helpful. No worries, the link will be shared with you on the WhatsApp group after this call. So please do not forget, next week Wednesday, that's the 14th of December, we're going to be having our Founders Day, and it's very important that and very mandatory that you make yourself very available for the Founders Day. We have shared the link to join the Founders Day and the notification just as a form of reminder. And please, if you have any complaints or you still want to share questions, please send in your questions between now and 10 p.m. WAT. I'll send that reminder again on the WhatsApp group so that we can collate all pending questions that might come in after this call. It's very important that you share them before we forward them to the facilitator. Please share your questions to us at Fashionomics Help Desk at cchubnigeria.com. I'll be more than happy to receive them and provide answers to all pending questions. Thank you very much, and do have an amazing day. We'll catch up on WhatsApp. The WhatsApp group will be open for networking very soon. But please, I want to appeal that if you have any questions, please do not hesitate to send them to Fashionomics Help Desk at cchubnigeria.com. There is also going to be a masterclass tomorrow with the bank in collaboration with Anchor. We shared that link yesterday. We will share that link again today for you to catch up with that masterclass session and register and ensure that you are a part of the masterclass session. Thank you very much. I don't think I have any other announcement from my end, but if there's any other important information that we need to pass across to you, we will not hesitate to send the information to you on the WhatsApp group. Thank you very much, everyone, for making time to attend this session. Thank you very much, Abiodun. This session was quite insightful, and I can see participants dropping their comments in the comment section. Do have an amazing day, everyone, and we'll catch up on the WhatsApp group. Thank you, and bye for now.